Hi everyone. So welcome to the stream today. Very much excited for having you. It's continuing with our Q&A session during those last few days for you to start your examination so that I can answer any questions that you are having as you do your revision and strategize yourself in order for you to actually pass the examination. So welcome to the stream. If you joined the stream, give us a thumbs up on the video. That way we get more engagement on the video. Remember, most importantly also, that if there is anyone that has to be part of this live stream, your friend, your colleague, or someone that you know has to be part of this live stream, feel free to share the link with them. Let them be part of the live stream, and let's get as many students as possible joining the live stream so we can together assist a lot of students so we can all pass our exams and take our lives to the next level. So comment in the chat box with any questions that you have for me. I'll be very much excited to answer all of your questions for you. I see some comments already coming in. You're welcome to the stream. Give us a thumbs up when you join the stream. That way we get more engagement on the video. So let's see. I see some comments there already. Let's look at what we have there. Okay, Abiodan Ogunleki, I see you. Good evening. I hope you're doing well. If you joined the stream, give us a thumbs up, smash the like button, let it turn blue, so that we get more engagement on the video. And comment in the chat box any questions you have for me. This is a Q&A session. I want to come your way, answer your questions for you, and assist you in order for you to prepare well for the exams and ultimately pass the exam. So comment in the chat box any questions that you have for me, so I will be able to answer your questions. I see some of you smashing the like button. Thank you very much for smashing the like button. Comment in the chat box with any questions you have for me. Patience, I see you. Greetings, sir. Please, how are you today? I'm better. I'm quite better now. Thank you very much for asking, Patience. I'm quite better. As you can see, I think my voice is coming back gradually to the normal. Michael Brown, I see you. Welcome to the stream. Smash the like button that is in blue. And comment in the chat box with any questions you have. I hope you are doing well as well, Patience, and then Michael and everybody who has joined the stream. I hope you're doing well and you are preparing for your examination and still working hard on what it is you need to do in order for you to take your life to the next level. So comment in the chat box with any of your questions. This is a Q&A session. I want to come your way and answer any questions that you have. So let's see, I see a couple of charts there as well. Let's see this. So a couple of charts coming in. Let's see. Ajay Nani, good evening. I hope you're doing well. Beverly Mahdi said, contact please. I want to be part of your class for next sitting ICA. 050-114-9296. It's a WhatsApp line. You can also call directly. 050-114-9296. 050-114-9296. I'm also going to put it in the chat for you, so you can call or WhatsApp that line. 050-114-9296. The patient said, we can only thank God Almighty for strength and making you better. Yes, definitely. He definitely has made you well. Yes, definitely. We thank God for that. Richard Amegashi, I'm back for good. Yeah, Richard, you're back for good. I think it's been a while since I heard from you, Richard. I hope you're doing well and you're preparing for your exams well as well. Okay, Prince David. Hi, Prince. I hope you're doing well. Welcome to the stream. If you join the stream, you smash the like button, let it turn blue. That way we get more engagement on the videos. But most importantly, comment in the chat box any questions you have for me, whatever you want me to talk about. Maybe you're learning something that you have challenges in and you want me to throw more light on, do well to put it in the chat box for me. That is why I am coming your way, so I can assist you to understand a couple of things. And if there are any other things that you would want me to talk about, also, you can put it in the chat box for me. I'm reading all of your chat here live, as you can see on my screen here, and I'll be replying them live as well. So 050-114-114, the 4 didn't come, right? Can you imagine that? 114-9296, 050-114-9296. So that is a WhatsApp as well as a direct call for our office line as well. Yeah, I see some questions coming in. Please comment in the chat box with any questions you have for me. This is a Q&A session, right? And as an executive Q&A session, I want to be able to answer your questions for you, provide you with some assistance on what you are studying, how you are studying, and how you can position yourself strategically to ultimately pass the exam. So comment in the chat box for me with any questions you have. As much as possible, I'm going to try and let you know what it is about the question so you can ultimately prepare well, adequately, and pass the exam. That is my objective, that you pass the exams. Okay, so let's see, see some comments or questions coming in. Let's look at that. Okay. Okay, Ajay Mani said, Man Accountant said, a brief explanation on behavioral aspect of standard costing. Okay. Zolak, I see you. You are welcome to the stream. Thanks for the thumbs up in the chat. Give us a thumbs up as well on the main video page. And if you know somebody that has to be part of the stream, you can share the video with them so they can be part of the stream. Then, sir, please can't see the number. Okay, the number is in the chat, 050-114-9296. 050-114-9296. I hope you can see that. Mate Augustine say, where do you stay? Where do I stay? I don't know why you're asking that though, but our office is at Dakoma, near Dakoma Station. Security reasons, I can't tell you my residence location though, but our office is at Dakoma, near Dakoma Station. So that is where we are. I don't know why you're asking where do I stay though, but Mate or Austin, I don't know why you are asking that, but our office is at Dakoma, near Dakoma Station. Prince David said, are the questions general? Yes, questions covering anything in your ICA, how you want to study, ACCA, whatever it is. Questions about your academics, whatever it is. So whatever question that you can throw at me, yeah, you can throw at me and I'll be able to answer the questions for you as much as I can. So a Nani rather said, a brief explanation on behavioral aspect of standard costing. Now, when it comes to standard costing, when we are talking about the behavioral aspect of standard costing, we are talking about issues such as generally some issues like planning and operational variances, like material price planning variance, then the material price operational variance. Then we are talking about issues in relation to preparation of revised budget, then as well as standard costing, and then total quality management. So if we talk about planning and operational variance, certain things like material price planning variance, that has to do with, okay, what happens if we estimated that, or we estimate that we want to sell a product of, or we want to buy materials at say $2, and then the actual price of the material is say $5. So we budgeted for $5, but the general market price is what? We budgeted for $2 and the market price is $5. That way, it tells us that we are not budgeting very well. Now, it could be because our management or our purchasing officers are not estimating the price well, or it could be that there are inflation in the economy. That is why prices of things go up. Then we have what is called a material price operational variance, which is the difference between how much the general price was and how much we actually paid. So if, for instance, the general price is 5, but we are paying 7, why did we pay 7 when the price was 5? So there could be some behavioral reasons. Maybe we changed the supplier. Maybe there was a product we were, the supplier increased the prices of goods and services. Maybe the exchange rate was going up and all of that. So that is an aspect of that. Then preparation of a revised budget. Revised budget can be in the context of flex budget preparation, where we are preparing or we are re-preparing the budget, taking into consideration the actual events that took place, the actual products that the organization actually produces. So generally, when we talk about behavioral aspects of standard costing, these are a number of the things that we are talking about generally in that case. Does it make sense? So it covers a number of calculation aspects, then it covers a number of reading aspects as well. Okay, so that is what we can talk about in that case. Martin Austin said, I saw you today at Dacoman. That's why. Yes, our school is located at Dacoman, near the Dacoman station. So if you see me at Dacoman, then possibly I'm going out or something like that, because we are at Dacoman though. But that is not where I stay. Nambi, Rebecca, what's the best way to study? All right. Now, when it comes to ways to study, I have covered a number of things about ways to study on my channel, but I will show you the fast technique that you can study. And I think yesterday I spoke about it when patients asked me a question. I think Monday or so, I spoke about that. But a fast technique originally by Jim Quick, a mentor I look up to when it comes to the effectiveness and the productivity of my brain and how I can learn things fast as much as possible. So the first technique here is this, that for everything that you are studying, number one, forget everything you know about it. Because if you have a preconceived knowledge of the thing that you think you claim you are studying, chances are you will not be paying attention. Chances are you may be brushing some things off. Chances are you may be relaxed about it. So the first technique is forget. Forget everything you know about the subject, forget everything you know about the topic, and start studying as a juvenile. Then the A in the first technique is you gotta be active. If you are studying, you gotta be active. Being active means you are copying notes. Being active means you are engaging what you are studying, what you are reading, what you are hearing. You are engaging it, you are talking about it. Why is it so? How can I apply it? How can the examiner set the question? How does it apply to something I learned in the past? How relevant is this for me going forward? How is it in practical life? One of the questions that I love a lot about patients on the stream here is that most of her questions she asks, she will add this phrase, how is it in practical life? So she wants the thing not as academically, but how does it apply in practical life at the end of the day? That is called being active. It means you are engaging yourself in studying. Then the You being active also depends on a number of factors. If you are studying and your data is on, messages are coming in, Facebook notifications are coming in, and you are replying to them, then you are not being active, you are not being focused, you are not being literally sane in relation to what you're doing. So you got to be focused on what you are studying. That is the A aspect. Then the S in the first technique is your state of mind. State emotions, this is what you must understand. Information plus emotion equals long-term memory. Information plus emotion equals long-term memory. So if you are, whatever thing that you are experiencing, whatever thing that you are learning, if you don't mix it up with the right emotion, you cannot memorize it. It cannot stay in your mind. So like I always say, maybe you are studying, then you are thinking about your boyfriend, you are thinking about your girlfriend, you are thinking about your spouse, you are thinking about the fact that you broke, you are thinking about the fact that something will happen to you, and you are thinking about all manner of things. That in that space of time, you are not in your right state of mind. Everything you study will not go through, will not be retained. So you got to make sure that you are in the right state of mind. Your emotion is in sync with your mind. You are not anxious. You are not nervous. You are not thinking about anything negative. Like you are blissful, you are peaceful, and you are sane, and you have a surrounding environment in what you are studying. Then the T is teach. That is, study as though you are going to teach somebody. Whatever thing that you are studying, study it as though you're going to teach somebody. I know you will say, Nhyira, I will never be a teacher. I got it. If someone had told me about 10 years ago that I'm going to be teaching, I'm going to be lecturing like this on YouTube, and I'm going to be writing books and be able to mentor students, I wouldn't have believed it because I didn't want to be a teacher. I didn't know that I was crafted for this. But here we are for the past 7 years. This is what I've been doing, and I enjoy doing it. So you study as though you're going to teach it. Okay, when you do that, it changes your mindset. Because, for instance, if I ask you to learn anything at all, maybe I ask you to learn an accounting standard, maybe IFRS 16, leases, and when you finish learning it, you're going to teach your colleagues at work. How will you do it? You're going to research, you're going to work hard, you're going to be focused, you're going to prepare your notes, and you want everything to be everything to be on point, because you don't want to disgrace yourself. You want to be able to prepare so that you can answer questions, so people will love you for who you are and for what you're doing. So if you learn as though you're going to teach, it changes your mindset, it changes your attitude, it changes your way of looking at the thing, and it will help you to memorize and be able to understand what you are studying very well. So, Rebecca, that is what I will advise, the simple language, the fast technique. And I believe that if you implement that, you will be able to understand how to study, how to understand what you're studying, and how to call what you're studying to memory at the end of the day. It all boils down to your environment. It's very critical. The environment you study in, physically, psychologically, emotionally, plays a key role in your ability to be able to recollect, your ability to be able to regurgitate, your ability to be able to memorize what you're studying. If you are in a porous environment, you're in a toxic environment, you are surrounded by people who are negative, people who don't have your best interest at heart, then definitely you will not be having the safest mind to be able to study. So that is what you need to understand when it comes to the issue about how to study. I hope, Rebecca Gambi, I hope that helps you on that. Michael Brown, please talk more on performance pyramid in strategic case study. That would be a whole lecture on its own. Let me see if I can get my slide on that and share with you guys. Let me see if I can get my slide on that and share with you guys so we can look at it. Let's see. Okay, so as I'm waiting on that, let me look at other issues about that. Now, if I don't mention your name right, please forgive me. Okay, it's not my fault though. But if I don't mention your name right, please forgive me. Olo Batui Kihindi. Olo Batui Kihindi. Please, sir, can you throw light on process costing? When you say throw light on process costing, what do you mean by that? Let me see if I can do that, throw more light. Now, in a simple language, when it comes to process costing, there are a couple of things that you need to understand when it comes to process costing. Generally, this is what is going to be happening in process costing. So I'm going to write a little bit on that. I hope you can be able to see my board well in that case. So when it comes to process costing, what is going to be happening here is that there are a couple of things you must note. Like I said, the issue about normal loss. All right. The issue about abnormal loss. The issue about abnormal gain. Okay, you must know all of these. Now, before I come to this, you must understand that when it comes to process costing, it is about where the production of a product goes through a number of stages or a number of processes, and for each process, we determine the total cost we incurred on the production of a product at that process. Now, at the end of the day, there are a couple of things that we must note, and that is the normal loss. The normal loss is simply the expected wastage under normal or usual production conditions. Now, always the normal loss is expressed as a percentage on the material inputs. So what is going to be happening here is that your normal loss, NL, is going to be your material inputs times the percentage of the normal loss. Why is that important? That is very important because once you have your normal loss, you will be able to now get your expected output. That is the output you are expecting from the production process. Now, your expected output is always going to be your inputs, all right, minus the normal loss. So if, for instance, I am sewing a dress and then I'm using 2 yards of materials, that is the inputs. But you know that we're not going to be sewing the dress using the 2 yards of the materials. Certainly part of it will go waste. So probably we'll be expecting that we will be using 1.5 yards to be able to sew the dress. That 1.5 yards to be able to sew the dress becomes what is referred to as what? The expected output. Now, at the end of the day, what is going to be happening here is that we're going to be comparing the expected output against the actual output. So when you compare the expected output against the actual output, 2 things can happen. Number one, it could be that the expected output is greater than the actual output. If the expected output is greater than the actual output, it means that there is going to be what is referred to as abnormal gain. Okay, the difference is referred to as abnormal gain. So, for instance, you are expecting to produce, or you are expecting to produce 2,000 units, then you end up producing 2,500 units. What it means is that you've exceeded your expectation, taking into consideration your normal loss. For that reason, the difference becomes an abnormal gain. The second thing that can happen also is that your expected output may be less than your actual output. So if your expected output is less than your actual output, then what is going to be happening there is that you're going to be having what is called an abnormal loss, meaning that you are losing more than what you expected to have lost based on your normal loss. So once you have your normal loss, you have your expected output, you have your abnormal loss or abnormal gain, then we can go to the preparation of the process accounts, okay? In the preparation of the process accounts, the simple thing we do is that all the costs we incur on the process, okay, all the cost that is incurred on the process is going to be recorded on the debit side of the process account, then the output from that process will be recorded on the credit side. But what is going to be happening here is that the normal loss may have a scrap value or may not have a scrap value. Now, where the normal loss have a scrap value, then we need to value the normal loss. The reason why that is important and we must take it into consideration is that we're going to be having what is called cost per unit. And this cost per unit, which is the value you're going to be placing on either the abnormal loss unit or the abnormal gain unit, is going to be your process cost minus the normal loss. Please note that the normal loss you are bringing here is the value of the normal loss. So if in the question we don't have scrap value, that means that the normal loss is going to be nil. Then we divide this by the expected output. So that becomes the cost per unit for either the abnormal gain unit or the abnormal loss unit. Please note that in the production or in the production process, what is going to be happening here is that you're either going to have a normal, an abnormal loss or an abnormal gain. Where in the production process there is an abnormal gain that comes on the debit side of the process account, where there is an abnormal loss that goes to the credit side of the process account. So basically, this is something that I can talk about when we deal with the issue about process costing. Yeah, there is a valuation of work in progress, equivalent units, but this is a whole topic on that. I don't know if we already have a video on that on the channel. I don't know if we already have a video on that on the channel, but you can check the playlist of my channel titled Management Accounting Lectures. I guess there should be a video on process costing. We have over 400 videos already on the channel. So you can check that playlist and find out if you get a full lecture video on process costing. But basically, these are some foundation issues that you need to understand. Al-Haji Al-Hassan said, lease or buy computation as well as exit or continual calculation, especially in the pre-scene, isn't clear at all. Al-Haji Al-Hassan, I don't understand your question. You said lease or buy as well as exit or continual calculation, especially in the pre-scene. In the pre-scene isn't clear at all. I don't know if you are talking about the strategic case study. Give me a moment. I don't know if you are talking about a strategic case study. So Al-Haji, if you are still watching, let me know if the strategic case study that is what you're talking about. If it is strategic case study, I don't know how you are coming up with those things that you are talking about, lease or buy. I don't know where it's coming from though, but like I said, if you clarify where it's coming from, if it is in the pre-scene of the May 2020 case study you are talking about, then maybe like critically let me know where exactly you're picking that thing from. As you can see, this is my analysis of the case study, and we are on the discussion with our students on that. So Al-Hassan, if you are still watching, let me know about it. Richard Amegashi said, can you explain the difference between specific and ad valorem tariff with calculations for me, please? Now, ad valorem is where we charge the tax or tariffs based on the value of the goods, while the specific has to do with the where a certain amount is charged on the goods, irrespective of the value of the goods. I get it. So with ad valorem, what is going to be happening is that as far as you are bringing in a certain good based on its value, we're going to be taxing it based on its value. But then if it is a specific tax, what it means is that each quantity you are bringing, we're going to be charging a tariff of say $5 per quantity. We don't care the value. But the ones that we're going to be using the ad valorem, that one, the tariff will be charged based on the value of it. So you determine the total value of the goods, then the tariff will be charged on the value, the currency value of the goods, and not the quantity that you are bringing. That is the difference between the specific and the ad valorem. Does it make sense? Let me know, Richard Amegashi. Please comment in the chat box with your questions. This is a Q&A session, so I'll try as much as possible to provide answers to your questions as much as I should be able to. And then Richard Kwame Kwa Yeboah said, I would like you to BSA ratio, that is question bank number 42. More importantly, the first two ratios. I don't really know what you're talking about though, but I think you're talking about the PSA ratios, question bank, question number 2. I would like you to, what do you want me to do? Please clarify it for me. Okay, Richard Amegashi said yes, sir. Anthony Daji, I see you. You're welcome to the stream. Richard Kwame, if you are watching, clarify your questions for me. Prince David said, sir, finally, can you help us on how to interpret ratios in public sector and FR? I have already done a 2-part series on interpretation of financial statements in financial reporting. You can check the channel and go and watch that video on how you can calculate the various ratios and interpret it. So I've done a 2-part series on that. The video is already available on the channel, so you can check it out and watch that video, Praise David. Olabatui said, can you solve questions on absorption costing with under and over absorption? Definitely, I don't have any question prepared today to solve on absorption costing and over or under, but there is already a video on the channel on absorption costing with the over and under absorption. So check the playlist on the channel titled Management Accounting. Let me just cross-check and see what the playlist is supposed to be. Management Accounting Fundamentals. As of today, there are 50 videos in that playlist, and I covered absorption costing and solved questions about that, which had over and under absorption in there. So I would recommend that you get that video in the on the channel in that playlist and watch it as well. Rebecca said, okay, so let's see, I'm seeing another comment coming in. Rebecca said, thank you so much. You really motivate me to continue my ACCA journey whilst working. Yes, it's possible to do it whilst working. All you gotta do is to make sure you discipline yourself and plan your schedules out well and prepare to study, and you should be able to actually go through it. Someone asked a question about performance pyramid in strategic case study. Who was that? Let me know if you are still online, then I can comment on that for you. That's Michael Brown. Let me know if you are still online, and I can comment on that for you. Any questions, please comment in the chat box for me. Any questions? This is a Q&A session. So I want to answer your questions for you and provide you with some assistance on it. Richard Kwame, I asked you to clarify your question for me as well, so you can do that. Samuel Quasin, I see you. Hello. I hope you're doing well. Any questions, put it in the chat box for me. Let's see. If you join the stream, you hit the thumbs up button and make it blue. That way we get more engagement on the video, and we'll be able to reach as many students as possible. Charles Zuli, I see you. Welcome to the stream. Any questions, put it in the chat box for me. So any questions, put it in the chat box for me. Let's see, guess I have some questions in here. Okay. All right, Ebenezer Osei, I see you coming on with a question. Let's look at it. For Ebenezer. Ebenezer said, can you explain economic value added in man accounting, an advantage and disadvantage of EVA, that is the same thing, economic value added. Now, the idea about, okay, I'm seeing another comment as well. Let me see about that. Okay, Samuel Quasin, your question on disposal of interest in an already acquired subsidiary, a work example will do. I already have a video on this on the channel. So check my playlist, I don't know, group accounts. You can check that playlist on group accounts. I did a video on that with a question, and you'll be able to understand that better. Let me just see the group financial statement playlist. Let's see if that is the playlist you need to look at. Yeah, so I did a video on that with a work example on disposal of interest in subsidiary with a work example. So I would recommend that you just watch that video there, and it will be able to help you to answer your questions for you. Okay, so let me talk about the EVA or EVA in that case. Now, economic value added is one of the measurement indicators that are used in assessing the performance of the organization. But the idea here is that it is where we are valuing the performance of the organization based on the residual wealth that is calculated by deducting its cost of capital from its operating profits, which is adjusted for taxes on cash basis. So what is going to be happening here is that we are really looking at what value has been added to the organization. So when we take your profits, usually we're going to be looking at the profit before interest and tax, okay? Profit before interest and tax and depreciation usually, and then we will deduct any cost of capital from it. The balancing figure that is we get is the issue about economic value added. Now, I think you are also asking about advantages and disadvantages. I may not be able to come up with a lot of points on the advantages and disadvantages of that, but the idea that we need to understand is that the economic value added, economic value added measure is a performance indicator, and what happens here is that it enables management to know that the profit that is coming out is actually generated from the operations of the business, and whether the profit generated from the business will be able to pay the providers of finance. That is why at the end of the day, we find out, okay, how much profits do we make? How much returns are our shareholders requiring? So that when we subtract the returns our shareholders are requiring from the profits we make, we find out, is it covering or is it not covering? So like I said, I may not be able to list like tall list 3, 4, 5 points on these. You could read these in any good book on, since you are talking about man accounting, I believe you have a management accounting textbooks. I cannot bring some of these things off head up, so you can read on that. But the idea, like I said, is about finding out, it's a performance measurement indicator, and it is used to assess the organization's performance by deducting the cost of capital or the returns that the shareholders require from the profits that the organization has made, which is adjusted from tax or with the tax for the organization. Eshen, your other name, I cannot mention it, so I don't want to mention it and spoil it. So I'm going to remain there. I will use the Eshen. Good evening, sir. Please, can you explain the learning effect and the quantitative analysis for performance management, that is P5? Yeah, the learning curve. I hope that you're talking about learning curve here. I think I have not, I don't have any video on that, but that is also another whole topic on its own though, in that case. But let me see if I can get a simple illustration on that, because I don't already have it on the channel. Let's see if I can get a simple illustration on that, and I can use that to explain your points to you. Someone said, as in disposal with control and disposal with no control. Okay. Yeah, so Asian F5, that is true. Ebenezer Osei said, can you explain total quality management and what it entails? Okay. And then Richard Kwame said, please, how to calculate non-oil primary ratios and non-oil fiscal ratio to GDP in Okay, now if you are asking that question, it means that you don't understand what primary and fiscal ratio is. Now, when we say, okay, so let me address the questions one after the other. The ones that just come easily, then I talk about that, then we go to the other ones. So when we say non-oil primary and non-oil fiscal balance, the primary balance is the net cash or the net operating surplus or deficit after all expenditures are deducted from the total revenue. That is the primary fiscal balance. But when we talk about the non-primary, or when we talk about, that is primary balance, okay? But when we talk about fiscal balance, I just want to make sure I'm in the context of your question. The fiscal balance is the net operating deficit or surplus after we deduct all expenditure with the exception of interest from total revenue. Now, the word non-oil here simply means that, you see, when we talk about total revenue of government, oil revenue are included. So when we say non-oil revenue, it means that you're going to be deducting, if the total revenue figure you see there includes some revenue from oil source, you're going to be deducting that so that you have a non-oil fiscal balance and the non-oil primary balance. So the word non-oil simply means that it is not supposed to include any oil revenue of government under the period in consideration. So that is what we mean by non-oil and then primary balance and then fiscal balance. So the primary balance is what is left after we pay all our expenditure, okay? What is left after we pay all our expenditure in that case? I guess the question you are talking about, you said question 42, number 42, or rather. Let me see if I can see what you're talking about. I have a slide on the ratios, PSA ratios though, but I don't know, the last time someone mentioned it, but the response wasn't too huge. Otherwise, it is something that I could go through with you guys in that case. But like I said, when we talk about the non-oil primary balance to GDP, it is simply your fiscal balance. You add back your interest, you subtract oil revenue, then you divide that by your GDP. Then when we say the non-oil fiscal balance to GDP, that is also going to be your fiscal balance minus your oil revenue divided by your GDP, all times 100, then you'll be able to do the computation on that. All right, so the question on learning curve, let me see. I should have a simple illustration here, so I would use that to solve the question for you. And I would use that approach because, like I said, we don't already have any video on it here. So even if I say you should go and watch, you may not get it directly on my channel. So let me see if I can just get my slide on that. Okay, so this is the idea. I'm going to use an illustration, and this is a question from who? Let me look at the name again. Ishen. This is your question. So I don't know if you are still watching, though, but let me answer that for you. Now you see, in dealing with, let's bring this guy a little up. Okay, you good? Yeah. So one of the things we need to understand when dealing with labor cost is that we need to look at labor efficiency and also idle time. And looking at labor efficiency, that is where learning curve comes to town. Now, you see, when you do something over a period of time, you become efficient, and the time you actually require to now do it reduces at the end of the day. So, for instance, let's say that we have labor, and labor takes, for instance, 80 hours, okay, to produce the first unit. Okay, labor takes, say, 80 hours to produce the first unit. And then let's say that it takes 50 hours to produce the second unit. So first unit took 80 hours. The reason why the number of hours reduces in the second time is that now labor has become a bit efficient. So the first thing we need to ask ourselves is, what is the learning curve? So the idea here is that the average time for every unit is going to be the 80 plus the 50, which is going to be 130 divided by 2, which is going to be 65. So the average time per unit is going to be 67.5 hours. Is that 67.5? I have my calculator somewhere here. So 135 divided by 2, yes, 67.5. All right, 67.5. So you realize that it took us 80 hours to do the first one, but now it's taking us 50 hours to do the second one. So the average time that the labor is taking is going to be only 67.5 hours in that case. Or let's see, am I getting that? 80 plus 50 divided by 2, that's 67. Let me make this 55 hours rather. So that is 67. So if I'm looking for my learning rates, okay, the rate at which labor is learning, that is going to be the average time per unit, which is 67.5, divided by the hours used in the production of the first unit, and that is going to be 80 hours. So 67.5 divided by 80, definitely times 100. It means the learning curve here is going to be 84%. Now, why is this important and how is this applicable? This is applicable where sometimes we are doing relevant costing analysis and we are determining labor cost. So if we are doing relevant costing analysis and we are determining labor cost, the examiner could bring in the learning curve. So he will tell you that, okay, the first unit produced was this, the second unit produced was this. What it means is that for each next unit that is being produced, labor is going to be using what? 84% of the total required time that they are required to have used in order to produce the product, in order to produce the service or to render the service. What it means then is that they are going to be requiring lesser hours to produce the next unit as an organization or as an individual in that case. So that is the idea about learning rate or computation of learning rate and how it applies to calculating the labor cost. Then let's see. So Asian, does this answer your question? Let me know in the chat box. Then I'm seeing another question also from Rebecca, or maybe a statement. Rebecca said, any tips on how to reconcile the sales on the sales ledger and then the VAT summary quickly? Reconciliation of in the sales ledger and then the VAT summary. No. I cannot bring that up now. So maybe some other time I could answer that for you, Rebecca. I could not bring anything solid on that now. So I will not start with anything to confuse you or to commit myself on that. So maybe some other time I could talk about this. Tomorrow, maybe on the live stream, if you join, I could talk about this because I wouldn't want to go into something that I'm not solid on. Advocate Gadisbeck said, good evening, sir. Please, want you to throw throw light on throughput per unit of constraint and throughput accounting ratio. Now that is a whole lesson on its own. Throughput accounting ratio is a whole lecture on its own. But this is the idea. When you say throughput per unit of constraints, this is what you mean. You see, under limiting factor analysis, there are two approaches that we can use. We can either use the marginal costing approach or the throughput approach, okay? So if we are using the marginal costing approach, how do we go about that? If we are using the throughput approach, how do we go about that? Now, your question is about throughput per limiting factor and then the throughput accounting ratio. I'm not going to teach in detail what these are though, but the throughput accounting ratio is equal to your returns per factory hour over cost per factory hour. But like you said, throughput per limiting factor is just like returns per factory hour, because throughput per limiting factor is where, let's say we put our currency up here, we'll bring the selling price, we will less direct material cost, then we will now get the throughput. When we get a throughput, we will bring the limiting factor. So usage per limiting factor will be brought. Now it will divide it. So when it divides it, the answer we get is the throughput per constraint or per limiting factor that you did. So throughput per limiting factor, this is how we go about it. And the throughput accounting ratio, you use the formula. So like I said, the throughput per limiting factor is just like returns per factory hour, which is the numerator, while the throughput ratio computation itself is using this formula in here. So that is it about that. Any other questions for me, please? Any other questions for me, please? Any other questions for me, please? So you put your questions in the chat box for me, and then I'll be able to answer them for you. Now, I think there was a question from Ebenezer Osei. Can you explain total quality management and what it entails? Let's bring this down a little bit. It's okay. So total quality management is simply a continual process of detecting and reducing or eliminating errors in management, in manufacturing, streamlining supply chain management, and improving the customer experience and ensuring that employees are up to speed with training. So it is a continuous process. You see, at the end of the day, products or processes will go through various stages of production. Total quality management involves ensuring that all the products we are producing goes through the required certification or the required stages to actually complete production, to actually meet the requirement. There is this drink, I forgot the name, I think Star Beer also. I think in one of their ads, I stand to be corrected on this though, but in one of their ads, they said that the beer has gone through 270 something tests. Can you imagine that? The beer you want to drink goes through 270 something tests. That is what we refer to as what? Total quality management. So it involves we finding out what errors are available, how we can reduce the errors, how we can eliminate the errors in our production process, so that ultimately we can improve the quality of the product and certainly improve customer experience with the product, so that our employees are always up to tax with the game on that. So that is the simple idea about total quality management. But there are a couple of key things that you must understand about the total quality management. The first one is that, like I mentioned, it is an ongoing process of detecting and reducing or eliminating errors. So it is not a one-time thing, it's an ongoing process. Another thing that I would want you to take away is that it is, or the focus is to improve the quality of the organization's products. That is it. The focus of total quality management is to improve the quality of the product. So if you are having a product that goes through 270 something test stages, then it's like you are taking the safest product on the planet Earth, so that all errors, all mistakes are detected and they are removed from it. Then total quality management aims to hold all the parties involved in the production process accountable for the overall quality of the final product or service. So it is not just about the production manager, it is not just about the laborers working on, or the factory hands. It is about everybody ensuring that the product is going through the required stages, the required processes, in order for the organization to ultimately produce the best quality products in that case. So that is basically what we can talk about shortly on that. Patient said, please, the writing on the throughput are unclear. Oh, really? Throughput accounting ratio is equal to returns per factory hour, that's the numerator, divided by cost per factory hour. Then the question was also throughput per constraints. So we bring the throughput is simply your selling price, SP, minus direct material cost, DMP. So when we subtract the direct material cost from the selling price, we get our throughput. Then we will bring the usage per LF. LF is the limiting factor. Usage per limiting factor. Then we bring it up and we divide it with the throughput, and that is what gives us the throughput per limiting factor in that case. Patients, I hope it is clear now on that. Olo Batui said, can you please explain integrated and then interlocking accounts? This is specifically in what areas are you asking this? Whoa, okay. Okay, so patients, let me know if you now get a writing. Okay, you are welcome. Any other comments, please put it in the chat box for me. Let's see what we can say on that. Ajay Nani said, sir, please, a brief explanation on Kaizen costing. Whoa, I I don't remember the last time I actually read on this. Let me see if I can remember anything about that today, though. But it's been a while since I read anything on that. I gotta be frank with you on that. But let me see if I can get my slide on that. Then I could share my screen with you and then explain something there for you. Okay, so the Kaizen costing is a costing system introduced by a Japanese, or Kaizen is also a Japanese word, meaning continuous improvement, okay? Continuous improvement. The word Kaizen means continuous improvement. And it was a system introduced by Yasuhiro Modern, and he defines the Kaizen costing as the maintenance of present cost levels for products currently being manufactured via systematic efforts to achieve the desired cost level. What does that mean? It means that as an organization is manufacturing a product right now, as an organization is manufacturing a product, what they'll be doing is that whatever cost that they are incurring on the products right now, they'll be recording it, and in real time, we'll be comparing it with the desired cost they have set. So it's more or less like they set a target cost that they want to, they set the target cost for the product. So maybe our target cost is say $20 per unit. So as we are producing the product, we don't wait till we finish producing the product before we determine, hey, what was the total cost and did we meet our cost? No, as we are buying inputs, we are producing the product, we'll find out, okay, maybe the first 100 we produced, we couldn't meet the $20 per unit. What went wrong? Maybe we wasted some materials. Okay, maybe we bought the goods, the raw material at a higher price. Okay, in that case, the next 100 we're going to be producing, we are going to shift the supplier or buy in bulk to enjoy discount. That is the idea about Kaizen costing in that case. So that is what you must understand about that. It is a system or the process of maintaining a present cost levels for products that are currently being manufactured via a systematic effort to achieve a desired cost level, so that you don't finish the whole period before you come and assess your performance. You'll be assessing your performance on stage by stage. It's a system, it's a cost reduction system actually. The Kaizen accounting is a cost reduction system actually. So that, like I said, if your target was $20, but the first 100 units, you are end up paying an average of say, or incurring of say $21, then what happened? Like I said, maybe you bought goods at a higher price or something like that. So then what do we do to reduce the cost and bring it back to the target? That is the idea about Kaizen costing. I hope that helps you well on that. Right, so I see other comments also there, but I think let me go to answer the question on integrated and interlocking cost accounts. Now with integrated cost accounts, what happens is that only one set of ledgers, both financial and cost accounting information, are kept in the same book. Okay, that is integrated, meaning that for cost accounting information and then financial accounting information, they are all kept in the same book. So the same set of ledgers are kept for the two class of accounts. But in interlocking, this is where two sets of ledgers with detailed cost analysis are kept for all cost-related processes, all cost-related activities of the organization. So that is the issue about the interlocking system. So we keep two sets of ledgers which allow detailed analysis of cost and cost-related processes, as well as the financial accounting information. But with integrated, the two are put into the same ledger account so that at the end of the day, we don't have to keep a separate books or separate ledgers for the two systems in there. Olo Batumi said, how to differentiate between cost and financial accounts, calculation aspects. If we say calculation aspect, I don't know what you mean though, but I don't know what you mean. But generally, if you say to distinguish between cost and financial accounts, can you clarify it for me better so I can answer you well? Please clarify that for me better, then I can answer you. Then he said, in advanced manufacturing technology, is advanced manufacturing technology the same as computer-assisted manufacturing technology? Yes, to some greater extent, we can call that as being the same thing. But please give me the clarity on your earlier question on how to differentiate between cost and financial accounts. I don't really understand the question. So please, if you can clarify that for me, I will be able to answer you much better. Someone is saying, okay, sending me a message on WhatsApp here that I cannot see the chat box on the YouTube presentation. The chat box is on YouTube. Check your, when you open the, let's say, this is my tablet. I don't know if you can see my screen well though, but when you open the chat, you will see the thumbs up, the thumbs down, then you will see live chat. So click on the live chat and then the live chat is going to open on the right-hand side and you'll be able to message or send your questions in there. Okay, Ajay Nani, you are welcome. Olo Batui said calculation aspect of integrated account. Certainly not today. I don't have any questions on that that I could bring for us to solve on that. So maybe sometime in the future, we could cover this in a video and release on the channel, but certainly not today to be able to provide you with any calculation on integrated accounts. So Olo Batui, unfortunately, I will not be able to do any calculation aspect of integrated accounts because I don't have any questions currently on that I'll be able to solve with you. Any other questions for me, please? Okay, so I think that if there are no other questions today, I'm going to be concluding around here today. I mentioned that I posted something on Instagram. For those of you who don't follow me on Instagram, I posted something on Instagram and I asked you guys to comment below, for those of you doing public sector accounting, whether you want me to cover the ratios in public sector accounting, but we've not had convincing or much response on that. You know, many of the contents that I posted and I teach live is the comments that we have from you guys and the responses that we have from you guys, because I wouldn't want to come and just teach something that I feel like teaching. So I posted that if you are interested in me looking at the PSA ratios and discussing them for you guys, you should comment on that. But we've not had much response on it. So You can follow me on Instagram, Nhyira Premium, and if I post something, you can comment below and let me know if it is something you want me to cover. I have all the ratios you need to compute here. We will go through and then solve some questions. Then I'll provide you with some strategies on that. But like I said, if we don't receive much responses on, then maybe we wouldn't cover that. Shamdud, okay, Musa, I think your first name is going to give me trouble, so let me just keep that out. Musa said, on gift tax, do we consider a food relief from your employer assumes as gift for gift tax? Can you clarify your question, please? Meal allowance from your employer has to be added to your income when determining the total accessible income of the employer. Okay, so meal allowance, it's part of your, it's not subject to gift tax because it is a benefit you are receiving through your employment or as a result of your employment. That those meal allowances will be added to your basic salary in the determination of your total cash emolument and in the determination of your total accessible income. So that is what you need to understand about that. He said like the COVID-19, I don't get the relationship between your question and the COVID-19 you mentioned. Maybe provide me with some clarity and then I will be able to understand. But like I said, whatever gift you receive from your employer, because it is employment related, that gift has to be added. The fair value of the gift has to be added to your basic salary in the determination of your total accessible income. So that is something that is taxable. Any other questions for me? Musa said, like during this pandemic, food was given to staff as a support. Yeah, maybe I cannot really tell the tax issue from the tax authority's perspective on it. But because of the pandemic, it could be exempted, that is not included in the total accessible income of the employee, but because of the circumstances under which the food was given, that we are all having a pandemic, so it could be exempted. But if not, whatever gift that you are receiving as a result of or as part of your employment has to be included in tax, unless otherwise the gift received is in a precarious or in a challenging or in a bereaved circumstances, under bereaved circumstances, then in that case, it will not be subject to tax. So I will not really be able to give you what a tax authority will say, but based on the circumstances, it could be added or could not be added based on directives from the Commissioner General, because I wouldn't want to give a rule on something that the Commissioner General hasn't directly commented on. Eureka, good evening, Eureka. I am watching live from Zimbabwe. Please, can you work out an example on accounting for investment in a joint venture? Okay, I cannot work an example today, Eureka, but maybe I could provide you with the strategy, with the treatment of joint venture arrangement. Maybe that will be better, so that another time I could cover a question on that for you. Now, accounting for joint venture, that should be, let me just confirm the standard that is covering. That is IAS 31, interest in joint venture, IAS 31. So a couple of few things that you must just note about that. You are asking about accounting treatment, meaning you know other issues about it. So let me just talk to you about the treatment. Now, IAS 31, that is interest in joint venture, allows two treatment of accounting for an investment in a jointly controlled entity. That is the proportionate consolidation as well as the equity method of accounting. Now, the proportionate consolidation is where every venturer, that is, if you and I enter and then we start an operation, every venturer will only take a percentage of their ownership from the business in that case, and that is the proportionate consolidation. So if I own 40%, it means that I am eligible to take 40% of the assets, 40% of the liabilities, 40% of the revenue, 40% of the expenses, everything I'm eligible to take what? 40% from the joint venture when I'm preparing my financial statement, and then you are going to be taking 60% as well. That is the proportionate consolidation treatment. Then another treatment is the equity method of accounting. This is the same as what you see in IAS 28, investment in associates, where this time around, we don't bring my percentage of ownership, your percentage of ownership. It's about the cost of the investment that we're going to be bringing up. And then our share of profit will be bringing up. And then our share of other, so we bring the cost of investment, our share of profit will be brought up. Any impairment in the joint venture will also be brought up. So the equity method just works like the IAS 28 investment in associate treatment in that case. So when it comes to the accounting for joint venture, these are the two methods that are allowable, or that are allowable per IAS 31, interest in joint venture, the proportionate consolidation, and then the equity method of accounting. Like I said, I don't have any handy question here that I'll be able to cover, but probably going into the future. Now, when I say the future, I don't mean the future, like 3-4 months from now, but possibly maybe Monday or something like that, I could come live and then solve some questions on that to assist you to understand. But these are the two principles. So in the question, we will always be told the method that is being used by the venturer, either the proportionate consolidation or the equity method. Traditionally, sometimes the equity method is preferable. Other times also the proportionate consolidation, it's also used. Then I am seeing another comment from Abdullahi. Said, hello, what are the most widely used accounting software packages worldwide? I cannot answer that question. I think this question will be good for Google to be able to answer that for you well, because I am not I don't really have that information at hand though. Hey, Google. Okay. So you can Google that, more Abdullahi, and you can be able to get that. We have the Sage, we have the QuickBooks are there, but I cannot really say this will be based on statistic data, which I definitely don't have. So I will not be able to answer this for you. Musa said, is there a compulsory tax value on rent offered by an employer to its staff when it may be below the market rent charge? Now, in the computation of the chargeable income of an individual, okay, in the computation of the chargeable income of an individual, what happens is that one of the non-cash benefits is rent or accommodation. So what happens is that if the accommodation that you are being given is, let's say, how much? 20 Ghana cedis every month, but you are paying 5 Ghana cedis every month, that means you are getting a benefit of what? 15 Ghana cedis every month. Are you getting the idea? So that 15 Ghana cedis every month times 12 months, if you are dealing with a year of assessment, that will give us the total accommodation benefits that you are getting, and that has to be added to your total cash emolument in the determination of your total accessible income. So that is how we treat it, that there is nothing like compulsory tax on that, but it is added to in the determination of your total accessible income. All right, so if there are no other questions for me today, I'm going to be concluding around here today. And my next class actually begins shortly in a moment. We're doing our executive revision masterclass for the ICA May 2020 examination. And we are in the final week with our discussions. So I'll be leaving you guys in a moment. And tomorrow, definitely, I'll be coming your way for another Q&A session. I think I'm seeing another comment coming from, okay. So Eureka said, thank you, sir. I hope to catch the joint venture example. Okay, that is nice. The question didn't state the rent for East Legon, but the company was charging the staff $150 a month. Yeah, so what is the question you are asking, Musa, to be specific? What are you asking? Yes, rent is, the law is, rent is subject to 10% of total cash emolument. You compare the two, and the benefit will be the difference in that, because it has to be limited to 10% of total cash emolument. It means that, now if you're asking this question, it means that you don't understand the treatment of rent or accommodation benefits and those things. So what I would recommend is that, I don't know the tax book you are using, but you can go through that to see the rules there. I don't know a book you are using, but this is my advanced, this is my tax book though on that. And if we check that, maybe let me just look at that for you. Yeah, so for accommodation, and it has to be furnishing, not just accommodation, because if it is just an accommodation only, it is 7.5% of total cash emolument. And if it is a furnishing only, that is 2.5% of total cash emolument. And if it is a shared accommodation, it is also 2.5% of total cash emolument. But if it is an accommodation with furnishing, then certainly that is going to be 10% of the total cash emolument. So like I said, you would have to understand those treatments and then vehicle the limitations on that, as well as you continue with your studies. Patience said, stay blessed. God bless you for these Q&A sessions. Stay blessed, Patience, and God bless you too for joining me all the time. So thank you very much, all of you guys, for joining me. Thank you, those of you giving us a thumbs up on the video and also sharing. In case you've not subscribed to the channel, make sure you subscribe to the channel. I'll be coming your way throughout 4:30 p.m. so we can answer some questions and also provide you with some strategies on what you need to do and how you need to position yourself to pass the exams. If you have any inquiries, you can reach us on 050 114-9296, 050-114-9296. So stay blessed, continue to study, continue to work hard, and I hope that you are preparing yourself mentally so that you will be able to actually pass the examination. I'm seeing a last comment here. Let me look at that. Good evening from Somalia. How long will it take for me to at least cover all IFRS courses? I don't know what you mean by all IFRS courses though, and I don't know how long you're talking about here. And I don't know what kind of examination also you're talking about here, because how long will depend on a lot of factors. It could be a year, it could be 6 months, it could be 2 years. All depends on your preparedness and your ability to make time available and to study. So there is no fixed time to say, okay, you will use 6 months, because what you will use 6 months to do, I can do it in 3 days. Okay, and what you may use maybe 1 month to do, I could do it in a day. It all depends on allocation of time and discipline. So I wouldn't give you any timeline, but it will all depend on maybe the exams that you are writing, how often the exams is written, or if you are just learning it for work purposes, then it's going to be based on how dedicated you are to be able to actually study. So all depends on you and what you would want to do and how you would want to study. So patience, Abiodan, Michael Brown, Ajay, Beverly Madi, Richard Amegashi, Prince David, Zolak, Mate, Austin, Rebecca, Michael Brown, Kahinde, Alhaji Al-Hassan, Richard Kwame, Anthony, Richard Amegashi, Samuel Kwasin, Charles Zuli, Ebenezer Osei, Ishen, Samuel Kwasin, Ebenezer Osei, Avoke Gajesbeg, and all of you guys, thank you very much, Musa and Eurita, all of you guys, thank you very much. It's always a pleasure coming your way and to provide you with some assistance in what you are studying in that case. Remember, we have about over 400 videos already on the channel covering various subjects, various topics. So chances are something that you are looking for, it's already available on the channel. All you have to do is to search the playlist on my channel, and definitely what you're looking for may be on the channel. And if it is not on the channel also, during our live streams, you can ask me, and then I'll be able to provide you with some strategies or with some answers on that. And where I don't have a handy information on that, I will just let you know about it, and then we will cover that some other time. So thank you very much for joining the stream. I will see you same time tomorrow as we continue with our executive Q&A session with Nhyira Premium, where I answer some questions that you're having to assist you in order for you to prepare well for your examination. So you take care of yourself and stay blessed.